All right, so today we are going to be talking about investing.
Investing?
Yeah, and I know that like a lot of our listeners are really interested in, how to make their money work for them over the long haul.
Right.
And we're going to kind of explore a surprisingly simple
Yeah,
but effective approach to doing just that.
for sure. And for this deep dive, we're going to be using the book, The Little Book of Common Sense Investing by John Bogle,
Okay.
founder of Vanguard.
No, I've definitely heard of Vanguard. They're pretty big in the index fund world.
Huge.
Right, but honestly, I don't totally get index funds. Like,
Yeah.
what's the deal with those?
Yeah, so an index fund, basically.
Yeah.
Instead of trying to pick individual stocks,
Right?
which is incredibly difficult,
Oh.
even for experts,
Yeah.
you're buying a little piece of the entire market all at once.
So instead of like betting on one horse, you're betting on the whole racetrack.
Exactly, you got it.
Okay.
So say you invest in an index fund that tracks the S&P 500.
Mm-hmm.
You're essentially holding a tiny sliver of all 500 companies in that index.
Okay.
As those companies grow, so does your investment.
Got it.
It's all about capturing the market's natural growth.
Okay, so that sounds way less stressful
Way less.
than trying to analyze every single stock
Oh, yeah,
out there.
for sure.
But why is this approach better than like relying on financial experts to pick winning stocks for me?
Well, that's where Bogle's research really shines.
Okay.
He found that over long periods of time, like 20 years,
Mm-hmm.
these simple index funds, they consistently outperform actively managed funds, where experts are trying to pick and choose stocks and,
Oh, wow.
yeah, they outperform them often by a significant margin.
So you're saying that paying someone a hefty fee to manage my money might not even lead to better results than just investing in like a basic index fund?
That is the surprising truth.
Really?
And the main culprit is fees.
Okay.
Actively managed funds have a lot of costs associated with them. Management fees, transaction costs from buying and selling all the time,
Right.
and taxes on any gains that they make.
Uh-huh.
All of those costs eat away at your returns.
So even if a fund manager makes some great picks,
Right.
those fees can still drag down the overall gains.
Exactly. Let me give you an example.
Okay.
Imagine two investments that both earn a hypothetical 7% return annually.
Okay.
One has a 0.25% fee, which is typical of an index fund.
Mm-hmm.
The other has a 1% fee, more common for actively managed funds.
Okay.
Over 20 years, that seemingly small difference in fees
Right.
could mean tens of thousands of dollars less in your pocket.
Wow, that's a huge difference.
Huge.
For what seems like a tiny percentage at the
Yeah.
start.
Tiny.
And this is where we get into one of the most powerful
Yeah.
and frankly exciting concepts in investing, compounding.
Compounding.
Like that word always makes my ears perk up.
Yeah.
What's the simplest way to explain it?
Well, think of it like a snowball rolling down a hill.
Okay.
It gets bigger and bigger as it goes.
Right.
Your returns generate more returns.
Mm-hmm.
And those returns generate even more returns,
Yeah.
creating the snowball effect
Okay, that makes sense.
of growth over time.
So the longer you let it compound, the bigger the snowball gets.
Exactly.
But how do fees factor into this whole snowball analogy?
Well, those fees, they act like tiny little gremlins chipping away at your snowball.
Okay.
By keeping those fees as low as possible, which is where index funds come in,
Right.
you harness the full force of compounding
Yeah.
and let your money snowball grow unimpeded.
I'm starting to see why Bogle calls this common sense investing.
Right.
It's all about maximizing growth while minimizing those pesky gremlins.
Exactly.
Yeah.
But there's another piece to his philosophy that I think we need to unpack here.
Okay.
The idea of market efficiency.
Market efficiency. Okay.
Yeah.
Does this mean I need to pull out my economics textbook?
No, not at all.
Okay.
It's actually a pretty straightforward concept with big implications. Bogle argues, along with other economists like Burton Malkiel, that stock prices already reflect all the available information out there.
So it's like millions of investors are constantly buying and selling,
Exactly.
reacting to news and trends and company performance.
And all that information gets baked into the price of a stock.
So trying to outsmart the market is like trying to predict which restaurant is
Yes.
going to be the hottest spot next year.
Yes.
It's basically impossible
Pretty much.
because everyone's making their choices and influencing the outcome already.
Exactly. It's a great analogy.
Okay, so it highlights why consistently beating the market is so difficult.
So difficult.
Even for like professional investors with tons of resources.
Yeah, even professionals.
So if even the experts struggle to outsmart the market. What's the average investor supposed to do?
Yeah.
Like throw in the towel and just buy lottery tickets?
Not quite.
Okay.
That's what makes Bogle's approach so empowering.
Okay.
He tells us that instead of trying to beat the market, we should focus on capturing its long-term growth
Okay.
with those simple low-cost index funds we talked about.
So instead of trying to outsmart everyone else,
Yeah.
we're better off just riding the wave of the market's overall upward trend.
Exactly. And that brings us to another key piece of Bogle's philosophy.
Okay.
Staying the course.
Staying the course, does that mean I just ignore the market completely?
No.
Oh.
It's more about having a long-term mindset
Okay.
and resisting the urge to panic and sell
Right.
when the market dips.
Like, don't get caught up in the hype.
Don't get caught up in the hype.
When it's soaring or when it's crashing.
Right. It definitely takes discipline.
Yeah.
Remember that snowball analogy?
Uh-huh.
Staying the course means letting it roll and grow over time, even if it hits a few bumps along the way.
Okay.
Remember, markets go up and down in the short term, but over decades,
Yeah.
the general trend has always been upward.
Right.
Okay. So,
Yeah. Okay. So let's say I'm like fully on board with this whole index fund thing and the stay the course philosophy.
Yeah.
What's next?
Yeah.
Do I just dump all my money into one giant S&P 500 index fund?
Well, not so fast.
Okay.
While the S&P 500 is a great starting point,
Uh-huh.
Bogle also stresses the importance of diversification.
Okay. Diversification, that makes sense.
Yeah.
But how do I diversify when it comes to index funds?
So instead of putting all your money into one index fund that tracks one part of the market,
Right.
you spread it across different asset classes,
Okay.
like stocks, bonds.
So I could have some in a stock index fund, some in a bond index fund.
Exactly.
Maybe some in international markets even.
Yeah, you want a mix of players with different strengths and skills.
Got it. Okay.
Yeah.
That way, if one part of the market stumbles,
Right.
the other parts can kind of cushion the blow.
Exactly. It's all about spreading the risk.
This diversification idea makes sense to me, but how do we actually build like a balanced portfolio? Is there like a secret formula out there?
Well, there's no one-size-fits-all formula,
Okay.
but that's where asset allocation comes in.
Yeah.
It's deciding what percentage of your money goes into each asset class.
Got it.
Like stocks, bonds, or even real estate.
So it's like creating a personalized investment recipe
Exactly.
based on my own circumstances and goals.
You got it.
Okay.
Your asset allocation should be tailored to, your age, your risk tolerance, and your financial goals.
Right. So like a younger investor with a longer time horizon might be more comfortable with a larger portion of their portfolio in stocks,
Right.
while someone closer to retirement might favor a more conservative approach.
Exactly.
Okay, that seems logical, but how do I figure out what the right mix is for me?
Well, we can't give specific financial advice,
Of course, of course.
but there are a lot of resources out there
Okay.
that can help you understand asset allocation
Okay.
and make informed decisions.
So we're talking about like robo-advisors,
Robo-advisors, yep.
target date funds, or even just like doing some research and selecting my own index funds through a brokerage account.
You got it. Yeah.
Okay, so there are tools and resources to help even those of us who aren't financial wizards.
Exactly.
Okay, that's a relief.
Yeah.
It sounds like Bogle's approach really takes a lot of the guesswork and emotion out of investing
It does.
and replaces it with like a simple long-term strategy.
Yeah, I think that's a great way to put it.
Okay.
Yeah, it's about tuning out the noise, resisting the temptation to chase hot stocks or time the market perfectly,
Right.
and instead building that diversified portfolio of low-cost index funds
Right.
that will capture the market's growth over the long haul.
Now, even though this approach seems pretty straightforward, I
Right.
think it's worth reiterating just how revolutionary Bogle's ideas were.
Oh, absolutely.
And still are. Like, before index funds became popular, investing was seen as this exclusive club
Well, for sure.
for like Wall Street insiders
Yeah.
and financial gurus. But Bogle really democratized investing.
He did.
He made it accessible to everyday people.
Yeah, he was a man of the people.
Like you and me.
Yeah, exactly.
He essentially said, you don't need a fancy degree or insider connections to build wealth.
Right.
You just need common sense,
Yeah.
discipline, and a little bit of patience.
Exactly.
That's such a powerful message.
It is.
And it ties back to his emphasis on keeping costs low. It's not just about saving money.
Right.
It's about leveling the playing field
Yeah.
and giving everyone a fair shot at building a secure financial future.
Yeah. I love that point.
And too.
It's a really important one.
Yeah.
By minimizing fees and focusing on long-term growth, Bogle empowers individuals to take control of their financial destiny
Right.
and build wealth on their own terms.
So to sum up Bogle's The Little Book of Common Sense Investing,
Yeah.
it's not just a guide to investing, it's a guide to financial empowerment.
I couldn't agree more.
It's a reminder that investing shouldn't be about trying to outsmart the market or get rich quick. It's about making smart, informed decisions,
Yeah.
staying disciplined,
Yeah.
and letting the power of compounding work its magic over time.
Exactly.
Well, after this deep dive, I'm feeling a lot more confident about navigating the world of investing.
That's great.
But let's be honest, most of us aren't financial experts.
Right.
How can we put these common sense principles into practice
Right.
without getting lost in the weeds?
That's a great question. And the good news is it's easier than you might think.
Okay.
There are tons of resources available to help you build a diversified portfolio of index funds, even if you're starting with a small amount of money.
Okay, so you're talking about things like robo-advisors again,
Robo-advisors.
target date funds, or even doing some research and selecting my own index funds
Exactly.
through a brokerage account.
The key is to find an approach that aligns with your comfort level
Right.
and investment goals.
Oh.
And you don't have to figure it all out overnight.
Right.
Start with the basics, educate yourself,
Mm-hmm.
and gradually build your portfolio over time.
It sounds like Bogle's message is ultimately one of empowerment.
It is.
You don't need a fancy degree or insider connections to be a successful investor.
I completely agree.
Yeah, it's about making smart, informed decisions, staying disciplined, and letting the power of compounding work its magic over time.
That's it.
Well, I don't know about you, but I'm feeling a lot more confident about navigating the world of investing after this deep dive.
Me too.
What are some key takeaways you hope our listeners will remember?
Well, I think the biggest one is to embrace simplicity.
Okay.
Don't overthink it.
Yeah.
A diversified portfolio of low-cost index funds can be a powerful tool for building wealth over time.
And let's not forget about those pesky fees.
Oh, yes, fees.
They can really eat into your returns over the long haul.
Yeah.
So make sure you understand what you're paying for.
Right.
And consider low-cost options whenever possible.
Couldn't agree more.
And finally, remember that investing is a marathon, not a sprint.
Yes.
Stay patient, stay disciplined, and focus on the long term.
That's right.
Don't let those short-term market fluctuations derail your plans.
So much wisdom packed into that little book.
I know, right?
Yeah. I have a feeling our listeners are going to be revisiting these concepts for years to come.
On too.
Yeah, investing is a lifelong journey. And the more you understand the fundamentals,
Yeah.
the better equipped you'll be to make informed decisions and reach your financial goals.
Now, before we wrap up, we always like to leave our listeners with a little something to ponder.
Yes.
So here's a question for you to chew on.
Okay.
How can you apply these common sense principles from Bogle's book to make more informed and confident investment decisions for your future?
It's a great question to consider as you embark on your own investing journey.
Absolutely. And remember, this information is for educational purposes only and not financial advice.
Always do your own research and consult with a qualified financial professional before making any investment decisions.
Wise words. Thanks for joining us on this deep dive into the world of investing.
Thanks for having me.
Until next time, keep seeking knowledge and keep those money snowballs rolling.
Keep them rolling.
You know, it's really amazing how Bogle managed to, take something as complex as investing and boil it down to these few core principles that anyone can understand.
He had a gift for that.
Yeah.
Cutting through the noise and just focusing on what really matters.
And it's like a testament to the power of those core principles that his approach has stood the test of time.
It really has.
Even decades after he first introduced these ideas, they're still incredibly relevant and effective.
Absolutely.
And that's what's so cool about this deep dive format is we can revisit
I love it.
these classic works and see how their wisdom applies to our lives today.
Yeah, it's like having a conversation with these brilliant minds
It is.
across time,
Yeah.
gleaning insights from their experiences
Right.
and applying them to our own journeys.
Speaking of applying these insights,
Yeah.
I'm curious, what were some of the aha moments you had while reading Bogle's book?
Well, one of the biggest takeaways for me was the realization that successful investing isn't about being the smartest person in the room.
Right.
Or having access to some secret formula.
Right. It's not about having some like insider knowledge that no one else has.
It's really about disciplined patience and sticking to a plan.
It's almost like he's saying, like, stop trying to outsmart the market.
Yes.
And instead harness its power by becoming a patient, disciplined investor.
I love that.
Yeah.
That's a great way to put it.
And it's so liberating.
Yeah, it is.
To think about it that way.
Yeah, it takes the pressure off.
Yeah.
Trying to predict the unpredictable.
Right.
And instead it focuses on what we can control.
Right. Our own actions and behavior.
Exactly.
And this ties back to his emphasis on long-term thinking.
Yes.
It's like tuning out that daily noise of the market and focusing on your long-term goals.
Exactly.
Whether it's like retirement, buying a home.
Right.
Funding your children's education.
Yeah, it's about playing the long game.
Yeah.
And understanding that wealth is built gradually over time.
Right. Not like risky bets.
No.
Or trying to time the market perfectly.
Exactly. And that brings us back to compounding.
Yes.
The longer you let your money grow, the more powerful that snowball effect becomes.
Time is truly your greatest ally when it comes to investing.
It really is.
The earlier you start and the more consistently you invest, the more you benefit from the magic of compounding.
It's true.
Well, I don't know about you, but after this deep dive, I'm feeling pretty inspired.
That's great.
To revisit my own investment strategy and see how I can incorporate Bogle's common sense principles.
That's fantastic. And remember, you don't need to be a financial expert to make smart investment decisions.
Okay, good.
Yeah, just start by educating yourself. Explore those resources we talked about earlier. And take small steps towards building that diversified portfolio that aligns with your goals and risk tolerance.
I think that's a perfect note to end on.
Yeah.
So to our listener out there, we hope this deep dive into John Bogle's The Little Book of Common Sense Investing has given you a solid foundation for navigating the world of investing.
Remember, investing doesn't have to be complicated or intimidating.
Right.
Embrace simplicity, stay disciplined, and let the power of compounding work its magic.
Thanks for joining us.
Yeah, thanks for having me.
On this journey of financial discovery.
Of course.
Until next time, keep seeking knowledge and keep those money snowballs rolling.